Good morning again. This is the second video in the series. I'm doing this one on November 21st also. I just want to establish a date so you can see the continuity, and then you can come back to this date in the future when you're watching these videos and see what happened with the stocks that I will discuss throughout this video series. Now I have opened a very basic chart. These are my charts. They're under my name, and this is chart number 1. And it's just pretty much a naked chart right now, with the exception of a moving average, your 90-day simple moving average on the volume down here. And there are some numbers down here. These represent dividends and earnings. But other than that, I don't have anything else on here. I just want to show you what a naked chart looks like, and then when we add the VPA signals and so on, how it really transforms everything. Now, the thing about VPA is you don't need assistance with it once you learn how to use it. That doesn't mean I don't leave the signals on my charts. I do, because they're very helpful. But for example, over here on this right here, this is what's known as a hammer. If you don't know the candlesticks, there are several good books out there on candlesticks and what they mean, and you'll pick up from my videos what most of these mean. But this is a hammer, which occurs after a stock moves down and then it closes near its high, and I'll put the crosshair on, and you can see that volume was slightly above average here. So I'm going to take my crosshair off, and I don't know if there's a VPA flag here or not. This is NVIDIA, which is a leading stock in the current market, and I'm just going to right mouse click, and I'm going to select Edit Current View. That opens up this box, and here you can see that under the daily chart I have hidden indicators. I'm going to double click on this one. This is volume price analysis, and I want to display the analysis in the upper corner of the chart window, and I want to draw VPA flags on the chart. So by selecting those two and saying OK, you can see that VPA flags are now generated on the chart, and also I have information up here in the upper left corner about what is happening. Now this is the 21st. The market is open. This is updating in the background using Thinkorswim, and the current information is the volume is, well, here I need to click on here, I'm sorry. Volume is low, spreads below average, and the close is down. That just represents the current bar today. Now yesterday, when I click on that, you can see it hit an all-time high yesterday. Volume was less than average, the spread was below average, and the close was very high. So shorts are probably covering here a little bit, but NVIDIA earnings come out today, so some institutions that are late to the game were probably buying yesterday, but you can see the effort was not all that great because volume was below average. But the result was a positive candle closing near the high. Now, in Anna's terminology, that would be an anomaly because it's a strong bar with relatively weak volume. But when earnings are coming out today, you can throw all that out because we have no idea what's going to happen. But if we go back over here and look at this for today, you can see the major trend is up using the random walk trends, and the best fit, which is a VPA trend, is long. Long is up, medium's up, and short is up also. So all three trends are up. Now there was no VPA flag, or there is no VPA flag on this hammer down here. I'm going to put the crosshair on. But volume was above normals. So what is that? If you look down here at the volume bar, you can see that it was above average, I should say. Average is the 90-day simple moving average of volume. So even without a VPA flag, that tells me that there was more demand than supply because it traded down and closed near its high on heavier volume. So that is a signal. This is why you need to learn both to read the candles without the VPA flags, but the VPA flags are a great assistance much of the time. Look back here on this one. Now on this date, strength seen returning after a downtrend. Here's your downtrend, and here's the VPA flag after an effort to fall. So that was reversal, and then there was a slight pullback, then it moved up. You can see how choppy and dangerous this stock is, though. What else do we see on this chart? If I put the crosshair up here, you can see that it did trade above an all-time high, but it's at resistance. So last time it got up here, it rallied, it couldn't get past resistance, and it came down. So earnings are going to determine the short term what this stock is going to do, and probably also in the long term, but you have to be very careful about buying a stock that is up against resistance. Traders that bought over here, they still may be holding their positions. And what do they want? They want to get their money back. Are they gonna wait and see if the earnings are blowout earnings, or is it too risky for them? And if they wrote it down here to this support area, they've been hoping that the stock will come back up here. So either it's going to give them an opportunity to get their money back, or they're going to take a chance that it's going to break out again. But this is where you want to be thinking about buying it. When you get a hammer like this and then a strong candle the following day, the volume wasn't as great, but you can see that it had a series of days where it closed near its high. When a stock closes near its high consistently like that, it means that during the day when it traded down, there were enough suppliers or enough buyers. There was more demand than the supply because it closed in the upper range in all of these. You don't need the VPA flags, but this one right here, the effort to rise, was a very good indication that this stock was going to go higher. The question is, do you want to be buying it here, or do you want to be buying it here as it comes off of this low pivot? Now let's add a little bit more to this chart. I'm going to right mouse click again. I'm going to just go in here and edit. This time I'm just going to use edit indicator rather than opening up edit current view, and I'm going to go into support and resistance. There are 4 lines. Sensitivity takes 2% move to change the lines, and I'm going to use the dotted lines here. So what this does is it shows me support and resistance. Support, or if it's gone past support, is in yellow here, and resistance is in red. So these lines are drawn automatically according to their parameters you put in there. Edit the indicator. Once again, you can see that the sensitivity is 2%. The number of bars, it says 4, but there are actually 8 because if this were right in the middle here, there would be 4 red and 4 yellow. But there's a total of 8 bars. But it's a little bit confusing, but just look at them visually and it'll give you a quick idea where support and resistance is. Just remember that wherever you put the cursor, that information is going to be reflected over here. So back here at this, you can see volume was above average, the spread was above average, and the close was very high even though the trends were all down. This is signaling that buyers are coming in. Now I'm going to drop down to the next chart, and it's the same information here, except I've added a window to explain what is going on in the market. Now this is yesterday's information. This is my chart 1A daily end of day statistics. But if I want to track it during the day, I just go down one more level to intraday and see how this is changed to intraday information. I'll go back up to the prior one. This is end of day information because it doesn't say intraday, and there's a lot of information in here. I'm not going to go over each one of them right now, but when I change to this, you can see this says intraday. Here's the date, the 21st today, the time, the last, and so on. And then if I go down one more, this has the intraday information, but I also have a lot of other information in here. What I'm doing is what I've done is I've built these views so we can quickly see the condition of a stock, not only on VPA and support and resistance, but how it is relative to the S&P. If this yellow line is going up, it's outperforming the S&P. These two lines here, the industry group is green, and I'm sorry, cyan, the industry group is cyan, and the relative strength to the industry group is green. So here's the industry group, and if this green line is up, it's outperforming its group. You can see it's flat, which means it's performing along with this group. But back here, as the stock was going up, notice that this line was going up, so it was outperforming its industry group. And the industry group is semiconductor devices. That information is over here, and it says that there are 65 stocks within this group. Once again, all the information is left in here. So this is how I quickly run through a stock to get information about end of day and intraday, or just if I want a relatively plain chart, I will look at this chart here, and I generally leave these support and resistance lines on. That's it for this video. I'll be going into this more in depth as we look at individual stocks and do scans and so on. Thanks for listening.